Ladies and gentlemen, welcome back to the channel. Today, not a great day for markets. And in today's episode, I will be going over what in the world happened today. Why did stocks sell off? The Russell down 1.4%, S&P only down 0.4%, when it sounded like we actually had some improvements between relations with the US and China. In today's episode, we'll break it down, what this means for your investments. And bottom line, is it a good time to start buying the dip in some of your high-flying stocks in recent times that are now selling off? It's no surprise. It's been a pretty rough, couple of days for these areas. You can even see, I'll point this out first and foremost, the CNN Fear and Greed Index is at 28. It's almost in extreme fear. What's happened is Wall Street understands what I've said in these videos, that in a worst case scenario, like recession, decoupling from China, you're looking at significant downside for these high-flying AI quantum areas, right? So Wall Street, what do they do? They get rid of those stocks first. That's why under the surface in this market, there's a lot of pain. But when you look at the S&P, you're not down much because people don't want to get rid of the Teslas, the Metas, the Amazons, the Apples, the Googles that are very predictable companies that are steady growers if this blows over. Okay. Well, is it about to blow over? Is it time to start doing more buying? And the answer, in my opinion, is yes. But we'll get into that in today's episode. Ladies and gentlemen, first things first, hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video if you guys would like to come join us in the trading community where we are going out finding smaller cap companies. They don't have to be smaller cap companies, but that's typically where Wall Street overlooks, right? Your smaller cap companies don't have a lot of coverage. A lot of Wall Street doesn't pay attention to them. They do once they get bigger, right? But it's a very underserved area. What we're doing is going out in AI, quantum, gene editing, biopharma, energy, right? Robotics. These main core themes I believe are going to be around for the next 10 plus years as literally like you have to invest in these areas, right? Google has to invest in AI, right? NVIDIA has to invest in AI. AMD has to invest in AI. You get the idea. That's basically the same for all these companies, okay? Well, we're going out, we're trying to find the good, the high quality, smaller companies in these themes and investing in them, okay, that are undervalued, okay? That's the idea. That is what we have been executing on. If you guys would like to come join us, check that link out down below in the description of today's episode. But with that said, let's get started. Now, in the news today, Kalshi is predicting the government will be shut down for over 40 days. In the news today, China Commerce Minister welcomes Apple to deepen cooperation with China. Wang Yi, a senior official in the China cabinet, if you will, says decoupling between China and the U.S. isn't a rational choice. China's Wang blames U.S.'s restrictive measures for trade tensions. China's commerce minister says he hopes to work with the U.S. and China to find solutions. China's commerce minister says recent China-U.S. trade ties fluctuations caused by U.S. restrictive measures against China. Also in the news today, Donald Trump and Putin will speak today, according to a White House official. Fed Moran says housing conditions are more important than markets. Fed Moran tells reporters he is not focused on asset price bubbles in a push to lower rates. U.S. Nuclear Weapons Agency to begin furloughs, the energy chief warns. Fed Waller says, I don't see a need to take monetary policy below neutral, which actually sounds good because if you want to go below neutral, that means you're trying to support the economy, which begs the question, how strong is the economy again? You know, that kind of thing. Fed Waller says once supply chains are disrupted, they may not come back to the prior state. Fed Waller says it would be good for the Fed to refrain from long-run forecasts. Fed Waller says, I personally have doubts whether the Fed should have SEP forecast. That is the summary of economic projections. That is where the Fed basically tells you their thoughts and expectations for the economy, for rates, for GDP, for unemployment, inflation. Fed Waller says, quote, we'd be hurting if not for the decline in labor supply. Fed Moran says 25 basis point cuts is too slow of a pace. Fed Moran says the Fed officials must treat all government policies equally, not only highlighting tariffs, basically saying, hey, what about provisions in the big beautiful bill? What about this or what about that the Fed does not seem to pay attention to? They only seem to pay attention to tariffs. And he's saying that's not the right approach. Moran says it would be much better to have government data. India says they are, quote, not aware of the Trump-Modi call. India's Ministry of External Affairs said Thursday they have no knowledge of a reported conversation between Prime Minister Modi and President Trump after Trump claimed Modi promised to stop buying Russian oil. And Fed Moran says we need rate cuts because of passive monetary policy tightening and improve inflation outlooks. He's basically saying, you know, the rates were so high for so long as inflation came down for so long that is passive monetary policy tightening and an improved inflation outlook, which is also fair. Fed Moran says the risks that emerged in this last week add urgency to the need to cut rates. I believe he's referring to the China situation, but I'm not 100% sure. And Fed Moran says the policy has gotten about 1.5% points higher this year due to a rapid rise in the neutral rate. And Fed Moran says the U.S. economy is in a pretty good place. U.S. regulators to offer capital relief to community banks, per Bloomberg. Uh-oh. Fed Waller says inflation is on a path to 2%, and it's not a barrier to rate cuts. Waller says his neutral interest rate is about 100 to 125 basis points lower than the current federal funds rate. So that's 4 to 5 cuts lower. Fed Waller says the rate outlook after October is dependent on the labor market. Fed Waller says he sees slower path of rate cuts if the GDP holds up or the job market speeds up. Fed Waller says if the job market continues to weaken, the Fed should cut towards the neutral rate. Fed Waller says tariffs don't appear to be depressing growth. Fed Waller says an extended government shutdown would be worse for the economy. Now, earlier in the day today, a U.S. trade official says that China is taking actions as though they want to decouple. So again, we heard from China following this statement and said, yeah, we don't want to decouple. That's where I started off this video by saying we had some positive developments in the China situation. This is part of it, right? The U.S. said this, and then China's like, no, we don't want to decouple. That sounds good. Fed Barkin says demand remains solid, particularly among those with higher incomes. She says it is clear that businesses are planning to pass along what tariffs they can. She says productivity growth is improving significantly. She says consumers are spending, but they are not as flush as in recent years and are making choices. And she says productivity seems to be increasing, which could offset some cost pressures. That is basically the headlines we got from Barkin. Moran and Waller are some of the individuals that are really in the running to be the new Fed chair, and those are the comments the markets put the most weight on. And today we got a new AI investor sentiment survey that was released, and boy is it bullish. Well, let me rephrase that. It's not bullish. It's so bearish that it's bullish. Bullish investors down to 33.7%, neutral investors up to 20.3%, and bearish investors up 11% to 46.1%. Neutral investors rose about 3.5%. And about a 9% rise, or fall, I should say, in bullish investors. So, yeah, when there's a lot of bears on this AI investor sentiment survey, that is typically a sign that you should be buying this market. Now, again, the CNN Fear and Greed Index today is sitting at 31, which, again, just shows you how weak these markets are under the surface. Market momentum is in fear. Stock price strength is neutral. Stock price breadth, extreme fear. Again, under the surface, it doesn't look great. Put and call options, greed, market volatility, extreme fear, safe haven demand, extreme fear, and junk bond demand currently in extreme fear. Okay, so first and foremost, we have a lot of news we have to cover in today's episode. There's partly, a bunch of Fed speakers, and the other part of the day today is trade and China and all of that. Well, as we speak right now, we are waiting for basically a readout of the conversation between Trump and Putin. That was the headline that really sent markets lower today. Now, stocks were not doing great to begin with, but this is what really sent markets lower, and I think it is a buying opportunity specifically with this news. Trump says, "I'm speaking to President Putin now." Trump says the conversation is ongoing, a lengthy one. And Trump says, he will report the contents, as will President Putin at its conclusion. So if you ask my opinion on this sounds good, right? This sounds like there's going to be some progress with Ukraine getting the war settled, maybe something to do with trade with Russia. But as soon as these headlines came out, stocks started to sell off a bit. I think that's a bad reaction. I don't think that's how markets should interpret this. Also in the news today, Goldman President Waldron says U.S. economic sentiment is improving. Maybe there's some nervousness around this. Japan raises visa fees to U.S. and European levels as tourist arrivals hit 31 million in the first 9 months of 2025, up 17% year over year, and on track for 40 million annually. Maybe the markets are looking at this and saying, hey, Trump might not like this, and pricing in maybe some risk of a Japanese trade deal falling apart. But, I don't think so, but, can't stop the markets from being irrational. Canada's Prime Minister Carney says we are restarting a broad engagement with China. Again, is this going to be seen as good or bad? Is this why markets are selling off? Because it's seen that maybe our second most important trading partner, Canada, is going to have a falling out with the U.S. It doesn't sound like it to me, but that could be part of the fear today. Because again, there's this headline from Canada's Prime Minister Carney that says there are times to hit back against the U.S. and there are times to talk, and right now is the time to talk. So literally sounds like progress. Carney says we are engaged in deep negotiation with the U.S. on several sectors. And then you have a headline like this that says Iranian Security Council Secretary met with Putin today. At the same time, a Trump call is taking place with Putin. Again, it doesn't sound great. Doesn't read great. But is it something we should really be fearful over? Probably not. So again, how do you navigate this market? It's actually pretty simple. On red days like today, you have to buy something. Now, I'm not a financial advisor. I am not a financial planner. I'm not a fortune teller. But on days like today, I am buying something. Okay? Do not listen to me. Do what you guys want to do. I buy on these red days. Now, if tomorrow is a big green day because markets were irrational to begin with and sold stocks today for essentially no reason, I'm going to just sit tight and watch the portfolio and then look for opportunities. But I'm not actively going out plowing money into stocks that are having big green days, okay? On those red days, I am, okay? And I'm averaging down if I'm down on positions, okay? But I'm keeping a certain level of cash on the sidelines in case this does get worse, right? I'm not plowing all of my money into one stock or a handful of stocks on the first red day, okay? Keeping cash on the sidelines. And if we fall 10 to 20%, that's where margin could really be useful, in my personal opinion, for my situation. Because then the risk reward is really good that you're going to make money. Okay, I think it's clear. Trump said, don't worry about China. That's basically as good as Trump saying the first time around, buy stocks. That's basically what Trump just said. Okay, and the hard part about this is some people are going to want to wait until the smoke blows over, or they're really not going to want to do any buying. And the problem with that is just one day, probably in, overnight or something after markets are closed, Trump's going to give the all clear that things are fine with China. And what's going to happen? Stocks are going to recover most of what was lost quickly. And you're not going to be able to benefit from that if you are not buying to begin with on the red days. So that's my personal strategy. That's what I am doing. Again, some of my favorite stocks like Resolve at $5.11, that comes into my buy zone in the fours. So we get another red day, that thing's in my buy zone, okay? Poet is one that I have been actively buying. That is in my buy zone, down almost 8% today. Resolve, down 6.5%, getting very close to my buy zone. Okay, some other stocks that we actually haven't talked about yet on the channel, like SES AI. That thing goes below 3 or to the low 3s. That's starting to get attractive again. Now I'm up like 80% on the stock still, okay? There's big gains, but that's when the average down starts to, or average up even, starts to look a little bit more attractive, okay? So you have to go out and buy something. I have to go out and buy something on days like today because I think down 1.6% on the Russell, on the IWM right now, doesn't make a whole lot of sense with the news that we got today. In fact, even earnings, we're getting into earnings season again. And yes, sure, like expectations are high. People are expecting good earnings. Highest earnings expectations, in fact, since 2021. But I think we're going to have a really good quarter. TSMC's profits surged 39% to beat estimates and hit yet another record on AI chip demand. Okay, awesome, right? We get earnings like this, even then consider markets are down so much today. I don't think it's the right reaction, right? I mean, they smashed expectations. Net income, 452.3 billion versus 417.69 billion. Revenue at 989.92 billion versus 977.46 billion. Okay, which is about 33.1 billion in US dollars. I mean, they're killing it. Okay. So again, is this something we should be like super fearful about today? No. In the news today as well, China accuses the U.S. of deliberately causing panic over rare earth controls, says it is open to talks. China's Ministry of Commerce accused the U.S. of creating panic over Beijing's controls on rare earth exports. Ministry of Commerce spokesperson He Yongquin said China was open to trade talks with the U.S. U.S. Trade Representative Jamieson Greer accused China of trying to control the world's technology supply chains in an interview with CNBC. This came out today at 11:40 a.m., a couple of hours ago, okay? That sounds like things are getting a little better, not worse. I don't think Trump wants a recession. I don't think Trump wants a decoupling with China. None of those things work in his favor. So, if stocks want to react irrationally, you need to react rationally. And you need to really look at the situation and say, hey, 2026, how's it looking? I think it's looking pretty good. Okay? Lower inflation, bunch of Fed rate cuts, money coming off the sidelines into the markets. Wars are getting settled. Trade deals are getting done. AI is alive and well. Real estate market starts to do better next year. Big, beautiful bill. No tax on tips, no tax on overtime. The tax provisions. So, again, with that backdrop, I want to be a buyer on these red days. And that's exactly what I'm doing. If you guys want to come see the stocks specifically that I am buying, that I am targeting to make a fortune on the next upside move that I think could be coming relatively soon, check that link out down below in the description of today's episode. Ladies and gentlemen, that is it. Have a great rest of your day, and I will see you in the next one.